What's going on, everybody? Welcome back to ITUTv podcast. And first, Happy New Year. If you're listening to this, we are officially in the 2026 year of the release of this episode. And before we talk charts, setups, or markets, I want you to understand something very, very important. This year is all about execution, not hope, guys. Today's episode is really special, not because of hype, but not because of any promises that were made, but because it represents what exactly is possible when you add discipline, structure, and patience into your trading. So we're sitting down with one of our ITU alumni who actually helps in the community as well. And they started this year, I believe, with a $200 trading account. And please correct me if I'm wrong, but over time built it into seven figures, which is a major, major milestone. Now, no shortcuts in this, no gambling in this, no overnight. I mean, this guy's been in the game for over 5 years now. Just processing, building up their risk management, and really building up consistency. So this conversation is for every trader who is out there struggling with trying to flip an account or putting themselves in a position of struggling with overtrading, or you're putting too much leverage on, right? You're trying to build these small accounts up. You're starting from really little, or you're even in the funded arena, right? So if you're in that funded arena, it's a whole nother ball game that you're battling with. So let's break down what was the structure and execution that this trader went through, how this trader read the market in real time. We'll get to look at some charts that he took trades on that either went in his favor or had to hold through some different pains. We talked to him before, and he had a 200K drawdown, which is not easy for a lot of people to stomach. So as we kick off 2026, I want you to think bigger than just profits. I want you to start thinking about your standards. So let's really get into it. Josh, thank you for coming through, and welcome to the podcast.
Yeah, no problem at all. Thanks for having me on, man. This is a great honor to be here.
Of course, man. It's really an honor to even see you cross such a major milestone, man. This is so big for you. I know it's really exciting. That thrill is there. How are you processing it now that you've made this happen?
It's wild though. I mean, I think it's like that's one thing that you get into as just like a trader. Like the longer that you go in just like your journey of developing, that you celebrate those milestones, but then also you ground yourself in reality though too, knowing that it is a business and that it's a long-term game. I guess to say even game, it's like it seems like a very light thing to just to put it in that term because then we can kind of take it for granted. But just like with that, just to look at it and say, yeah, that was an amazing accomplishment. Now it's time to go on to the next thing and just, kind of just keep really scaling and focus on what's ahead.
Most definitely. So you have many background, many facets as far as education is involved, and that kind of goes for every trader. We dip in different arenas, dip our toes, gather information of what works, what doesn't, and we start to add into our own structure, building our own plans. So what at ITU did you learn that helped you in your endeavor and applying into this process as you built this account?
I think that one of the main things that like it's really overlooked just overall is definitely it's the psychology of things. And really that's just more so just the patience. And one of the things I mean that we do emphasize here with ITU is that psychology is like it's a main portion of trading because I mean it'll test you at times. I mean when it comes down to the wire though, because like everyone wants to see that blue screen at the end of the day, and that we see like all the stuff on social media, but unfortunately that stuff is just 90% hype. And I think that like where the academy comes into hand is that like it's grounded in reality. It's a place where like you can learn as a student and develop, but then also it sets realistic expectations though. So it gives you the tools. And I think that's one thing that's really helped me a lot though, is just it's a complement and other educational sources that I've done and gone through. But it really just kind of just pairs well all together, knowing that it's a career. It's not just something that we're going in to gamble on. We aren't putting, our chips on red or black and then, spinning the wheel and hopefully it's, somewhere along the way. Because if you do that, you've already lost. So I think that's one of the main factors here. It definitely sets ITU apart.
No, that's a big thing, man. A lot of people come in, and I know I've seen traders time and time again come sit down in the session and just kind of swing it back. They're not really taking it as serious as they would a regular position or a regular job, but they want those results. They want to get paid out like it's a career, but they're not showing up like it's a career,
Yeah, absolutely.
So another question. So how long did this actually take? Is this something you started at the beginning of the year, last year, or been working on the last few months?
In 2026, traders cannot afford to sit on the sidelines. This is the year of the action takers, the year you make a decision that changes everything. At Independent Trading University, we build an experience that brings together what traders have been missing for years. Mindset that keeps you stable, economics that keep you informed, technical precision that gives you direction. One complete system, one community, one path to independence. From January 14th to 18, ITU Rise 2026 will take you through 5 powerful days of coaching, clarity, and next-level growth. This is your chance to level up with your coaches live, build your personal trading plan, and finally break the habits holding you back. General admission is free. VIP access is optional for those ready to go deeper. VIP $27 admission includes morning motivation with Daniel, pre-session Q&A 6:30 p.m. Central Standard Time, recording access for 7 days. Enjoy 7-day enrollment to ITU. Part of admission will be donated to the Grace Works program. Receive a discount on the ITU 30-day bootcamp. Digital copy of ITU Trading Guide $4,000 worth of value for $27. Whatever path you choose, one thing is certain. If you want 2026 to be different, this is where it starts. Register now at rise.myitu.org. ITU Rise 2026. The year of the action takers.
So really the $200 basically account flip, that was just, I'd say, a mixture of between dumb luck and just really just timing, to be honest. I mean, because honestly, a lot of it was done through the major bull run that we had on gold. And when they talk about, those runs that, they make or break millionaires, that was really one of those moments. I mean, because like when you see it and you see the way that the market's going, it not only allows you to scale properly, but then it also gets you into that position of like, that it's here for the long term. So you can look at maybe being a little bit more aggressive with it. So I mean, the whole luck thing is just, I mean, it definitely is tongue in cheek, but I mean, it is true because it's like when you get into those modes and when the market is giving you those opportunities, we got to capitalize on them because a lot of times what we see even through, like I said, social media and stuff like that, it's kind of tainted trading a lot because trading it's a long-term game. I mean, overall, like, because like that's the way that like I think that we forgot about it as like retail traders and especially those who trade forex is that because we're so focused on just a quick turnaround and the numbers, it's an investment, but then also it's a business though too. So we got to look at from a holistic perspective where that we're looking for long-term gains but short-term profits. So wherever we get those short-term profits in, that we can capitalize off of that. Sometimes it's allowing us to aggressively scale or aggressively put in different leverages on accounts that we normally wouldn't leverage to that amount. But it just opens us up to those possibilities. So as those positions present themselves, we can really just go forward and utilize them for what they need to be used for.
Of course, completely agree, man. And making that step through taking the small wins, being able to accept them, but adding into it, right? We've got to learn when the time is right to scale. And I think that's a really important thing about you being able to make that step happen is knowing, timing, scaling, taking hits in a way where it's not like, I know we've got students that just shooting all the time, right? They're always placing trades every day, 4 or 5 trades a day, and then they're upset while they're blowing these accounts.
Right.
But it's having a structure and a discipline, right? Once you start to scale that up, knowing that
Absolutely.
as much as you could blow, $100, $200, it's no different than blowing that $20,000 account, right?
Yeah.
So you've got
And I think
maintain that.
it's like what you said earlier though too. It's like it separates the mature trader from like the immature trader because it's the mature trader who goes in who's able to see the market and say, yes, there's there's opportunities every day, but it's not always worth risking that. Because it's like, again, it's like a business. And like one of my favorite terms, or like one of my favorite sayings that I've heard in just like the business arena is it was from a guy who does life insurance out in Colorado. He's got this multi-billion-dollar company, and his one of his quotes was, if it doesn't make you money, don't do it. And it's literally that simple, because it's like, any other major corporation that you're going to look at who is profitable, for the long run, that, they get into things and they say, okay, we tried, like, it was years ago that I think it was Hardee's. They did like burritos. And they said the burritos are just not working. So it's like the same thing for us. Some people want to get into gold, they want to get into the indices because they want to see the numbers turn. But that's their burrito. And that burrito is just not working for them. So they got to get to that point of like where they're able to either utilize that different instrument or that different avenue to make money. But then also, if it's not turning profit, just go back to what because it's better to make like a slow term gain or get like better setups that can give you quality over just, the quantity. Because I'd much rather have like, maybe one or two good trades for the entire week, be able to do multiple positions on that and then capitalize off of it versus going in and, like you said, shooting from the hip and getting, 15 trades on a screen just because I think that they're going to go into profit. Then all of a sudden, my account's completely gone.
Right. And then especially if you spread yourself thin. I mean, some people, I know they have the idea out there that you should have like 3 instruments or 5 instruments under your belts, just in case one's not working and you can have a backup. But that could be a detriment to you, right? That could be putting you in a position where you're the type of person that needs to be patient enough and wait for one instrument to get in position and take advantage of it, and then knowing when not to be in that position, right?
Yeah, absolutely. Because it's like one of my mentors, though, like he puts it real well. It's like every day that you stay out of the markets and you avoid a loss, you've already won. Because I mean, that's the thing is like we want to see the wins, to turn money, but then like it's as much of a win for you to say, today's not a trading day. Like I don't see any opportunities. It's not presenting itself to me. And if it doesn't make sense, I mean, don't trade it, because that's the thing. At the end of the day, you have to be able to see it and you have to be able to know what the markets are doing, because if not, then, just don't try and rush it. It's better to find a setup that, you're like 95% sure on versus one that, you just hope turns. And then all of a sudden, next thing you know, you've got, $100,000 out of your account. You got, your little, $2,000 account, you're sitting on $5. It's like, you're not running a business.
Yeah, exactly. Business is about to shut down. No, that's true. That's really true, man. So let's get into the next one. What do you feel was the hardest phase of the journey? Like either the early grind of it, or finding the consistency, or starting that scaling practice?
So I think that the biggest part for me, honestly, was probably it was the patience. It was the patience of knowing like the sessions, because initially, that's one thing that we see. We see the markets open 24 hours a day, 7 days or 5 days a week. And then, we see other things like crypto that we have the ability to trade all the time. And I think that was one of the biggest things, knowing when the volume and liquidity was going to present itself into the markets, along with that structure, so it would have a chance to basically allow the market to reset, gather itself, and then once it comes out of that place of, coming to a good place of support and resistance, that, then we have opportunities that present themselves for the next session. So for me, I mean, thankfully, I've been blessed with the amazing job that I can go and I can trade in my free time, because I have so much of it during the day, which I know a lot of people don't have. But that's one of the advantages of having a market that is 24 hours, is that you can always go in there when you're able to. And because really what's taught through ITU and just in general, like when you start developing as a trader, you get so many tools underneath your tool belt and you say, I can trade like this, but I can't trade like that because of my time parameters. And I think that's where people get lost a lot of times, because they want to sit on the charts, or they want to, kind of just get tunnel visioned. And it's just like, guys, you have to remember the setups are going to be there. The market's going to be there. It's always going to have something that it's going to present itself, but you can't get so focused on trying to watch every single move, because if you do that, you're going to just like burn yourself out.
Oh, that's a fact. That's a fact. And I like that you said that you built a life like where your trading can exist in comfortably and you don't have to be, running behind it, chasing it, looking at your phone over and over again.
Yeah.
It's like, okay, let me get this part of my life under control, scheduled properly, so then I can leave opening for my trading life to exist.
Right, right. Yeah. And that's the thing, too, because for me, it's like, yeah, looking at it as a business, but then also, I mean, I want to utilize that time that I have available to trade during the day because I mean, my time with my family is more valuable than anything. And I want this to be, a vehicle that, is allowing us to, to drive our future and is going to be a blessing to us, but then a blessing to those around us, though. And my focus isn't going to be, sitting on the computer, 24 hours a day chasing the money. It's like I want it to be able to just work for me because it's like, I mean, Warren Buffett said it the best, like he said, like if like he's like, you need to be able to make money in your sleep. So that's the thing is you need to be able to just let it do what it's going to do. Let the money work for you. Let the markets work for you. Stop trying to work for them because once you realize that they're your best employee, then you're already in a good place and that you're going to be set because you know how they move, you know how they operate, how they breathe. And when you can do that, you can work with them instead of for them.
That's a fact, man. That's a major, major shift right there. I know that's going to help a lot of people. So think about that, guys. Am I putting myself in that position to be able to be successful by making this type of shift, allowing the markets to be, working in my benefit and not be a slave to the market, not chasing the market. But I mean, a lot of other things in life are the same way. A lot of you guys might be in a position where you're forcing work or you're forcing relationships instead of putting yourself in a position to allow these things to work for you, to come to you in the right timing and you execute appropriately. So that's really big. I thank you for that, Judge.
Yeah, no problem, man.
So what changed would you say mentally when you realized, okay, I'm going from, working a small account, building this account up, and you're starting to realize that these are way bigger profits. This isn't like a small account flip thing anymore, but
Yeah.
I'm going from, things are getting real business now, right?
Right. Yeah, I mean, it's weird because it's like once you start seeing those big numbers, like you're like, yeah, come on, I want to see those every day. And I mean, it is realistic though, because like you're able to do bigger lot sizes, so the profits turn a lot faster. But then at the same time, though, too, you also go, I'm also gonna be needing to mitigate my risk even more because when I'm going in there and when you go from doing a 0.10 lot size to now working with like 100 standard lot sizes, like you're in big boy land. And it's like you've changed, and like you've changed your pants real fast. So it's like you got to realize that you got to man up though, and like this isn't just like a game or just like just a hobby anymore. It's like you're actually going into a serious place with this because this is gonna like literally it can make or break your account. So there's been those times where I've had to really step back and just really look at that because I'm like, okay, it's more important to maintain the integrity of my account and to treat it like that business versus to try and to chase a trade. So like I had a trade on gold or not gold, but it was oil actually just these last couple of days. I'm like, okay, I see the way the market's moving, but because of Christmas, it's just like it doesn't have a lot of volume in it, so it's gonna probably be a slower trade. So just for fun, I put it like it was a 0.01 on it just because I wanted to just see where it was going. So like I know it's gonna move, but I don't know how fast it's gonna move. So it should give me a little bit of time to at least go in there and get some decent positions on it. And then I looked at it literally today, and I'm like, oh my gosh, it went down. It went into like $10 worth of profit. So I'm like, man, if I would have actually had one of my normal lot sizes on that, I would have been sitting on like at least 100K to possibly 700K, on that one small move. And it's just like, because it moves that fast, but then it's just like at the same time, you're mitigating that risk because like you don't want to get into a position because the markets aren't as active that, that you're going, well, it could do this or it could do that. Like you want to have, it's calculated risk and it's like, it's management of your accounts versus just going in there and going, I want it to do this. And then next thing you know, it goes in the opposite direction.
Right.
I have something truly special to share with you today. Have you ever dreamt of financial success and didn't know where to start? Look no further than Independent Trading University. At ITU, we offer a diverse range of courses, from Forex basics to advanced technicals, along with comprehensive fundamentals education, mindset coaching, health and wellness guidance, plus stock and crypto trading strategies. That's right. Everything you need for a well-rounded trading journey, all in one place. Our mission is clear, helping you make extra income by learning the art of trading. Join us today at solo.to/independent-trading-guru and take advantage of an exclusive pre-sale. $50 for undergrad students looking to trade part-time, and just $75 for career traders ready to dive in full-time. With ITU, you'll master the art of making consistent income from the markets. This is your chance to start building a brighter financial future. Are you ready to transform your trading game and take control of your financial future? Look no further than Independent Trading University, your one-stop destination for comprehensive Forex education and so much more. Whether you're a beginner or an experienced trader, we've got you covered. We believe in a holistic approach to trading success. Gain a deep understanding of market fundamentals, master your mindset, and prioritize your well-being. We're here to support your growth every step of the way. And let's not forget about stocks and crypto. Discover exciting opportunities and learn strategies to make extra income. The best part? We're running a limited time pre-sale for new students. Don't miss out on this incredible opportunity to gain the skills, knowledge, and support you need to succeed. Ready to make connections with your financial future? Visit our website at solo.to/independent-trading-guru to secure your spot in our pre-sale today. Independent Trading University, where trading dreams become reality. It's time to start your journey to financial freedom. Don't wait. Visit solo.to/independent-trading-guru now.
Right. And it's always those ones where it's like you have that level of expectation you put on there. I want this to happen, or,
Right.
oh yeah, this is definitely going in this direction. And those are the ones we always end up taking those L's on.
Right, right. And that's the mindset shift though too, is because even like on demo accounts, whether it's demo or live, like you want to treat them like as an active account, because the markets are still the markets. And at the end of the day, like if you can treat a demo account the same way that you treat a live account, then you're going to be golden, because then you're actually going to make progress as a trader and like actually learn this as a job versus just kind of like, maybe a side hustle or something that's, just done for fun because you have some curiosity about it. And like, so, you always want to set that stop loss. And you always want to be mindful of where you're doing it though too, because I think that's one thing that we get in the habit of doing, is that like we want to have like such a small stop loss that we miss the bigger picture. And that like when we do that, oftentimes that's where people get stopped out too early, or that's where like, they don't allow the markets to breathe enough, because the markets are almost like an organism though. It's like, in some ways it's like you got to be like a surfer. Like you go out there and you're looking not for like just those one or two waves. You want to catch like the best wave, because it's better to go out there one day and then you catch one huge wave, and then like you're riding Mavericks, versus you're just going out there like, oh yeah, I caught a little wave, I rode it to the shore, and $10, which $10, $10 is $10 though. But then at the same time though, it's better to get on those ones where it's gonna like continue and it's gonna flow, so that you can go ahead and you can keep moving with it. And then once it's done, it's done. Don't try and make it more than it needs to be. Don't try and force it. And if it continues and it opens up and it offers other positions, then take them. But then at the same time, don't like get into a place of like you're trying to get in there and you're trying to force it to do something that it's not.
Yeah, I like the direction you're going with that, because it's speak on abundance, right? Where is your mentality at with the market?
Right.
Do you feel like it's going to go somewhere, or you won't be able to have another opportunity tomorrow? You've got to make this money today. Or do you have an abundance level mindset, right? Of expectation of there is plenty of opportunity. I can always come back in a day or two and still, profit. So that leads me to ask you, how important is it to have that kind of positive abundance like mindset in your trading?
Well, one thing that I think that's really important to emphasize though too is for people who are just getting started, and just really just anybody. I mean, it's just like, because unless you're in a place of like having this stable, you got to always remember it's trading. And as much as we want everything to be guaranteed, we hit that button and we're like, yeah, we're going. It's like, it's still trading at the end of the day. And unless you've been doing this, for 30 years and you're like, the Einstein of Wall Street or, or whoever, out there, and you've actually, you've got not only your strategy and your system down where you're actually turning profit consistently, you got to remember though, too, you need to have something coming in for your family because they come first and foremost above everything else. So I think that's one of the mindsets that a lot of people need to get into first is that this is an amazing career and it will make you way more money than anything else you could ever do legally. That's the key. But the thing is though too is that you need to get in that place of being able to execute that and do that consistently versus just going in with hopes and expectations and then you put everything else to the side and then what's most important gets forgotten about. But as far as that goes, I think that just the reality of it is just going in and taking things step by step. Because it's better to have a little account. This is one thing that I like, but I don't like about a lot of the funded challenges because it gets people into a mindset of constantly turning profit in like such a quick manner that they forget when they get in the markets, they might be able to pass the challenge, but can they maintain that in the long run?
Right.
And I think that's why a lot of people, they go from challenge to challenge, either they're failing them or, they're finding those instruments where they can make a lot of money really fast and they're doing like scalp trading, which is not bad, but like, again, you have to treat trading like, you have your tool belt, like it all has its different places, it all has its different uses. And like, you have to have the times and the seasons to be able to execute each one of those. But that gets people in that mindset of like, this week I have to make 5K because if I don't make 5K this week, then, I'm going to fail this challenge. But then at the end of the day, once you get your challenge passed, it's like, that's great. But then, are you going to be able to maintain that? Or is it just going to be something that you're always going to be pushing for and you're going to get yourself in a bad situation? And then maybe you pass multiple challenges, but then at the same time, you have nothing to show for it at the end of the day.
Yeah, no, that's definitely true because with funded challenges, it's a proving ground, right? It's showing that you're capable. So if you can't do it, just again, you're setting yourself up to a career mindset. If I'm going to be doing this for a living, I need to be able to do this month, next month, the month after that, 6 months from now, still be able to do your job as a trader. And that's what the funding programs are looking for, people who can do their job consistently.
Yeah. And that's why, like, one thing that I would even say personally, and this is just a personal take on it, is that, I'd say like if people are even doing funding challenges, I'd say I would challenge them then to take now some of their own capital that they've worked for and to put it on the line and say, okay, if I can do it with a funded challenge, I should be able to do it with my real money, because then if you do it with your real money, then you aren't having to take a percentage from these companies and say, I can only get, 70% back, I can only get 80% back, and the rest of it's going to go towards this, this entity, whereas you're going to get 100% of that back and you're going to have a guarantee. But then also you have to look at it from a longer term versus just coming in from just like, a shorter term mindset. And I think that's where a lot of people get lost.
Yeah, for sure. And taking that into account, there's the rules that come with being followed in funded challenges. If you apply those to your live account, you'd be more successful, you'd be more disciplined, right? So that is the one thing I do like about funded challenges is that they hold you to a standard. You've got to bring your standard over to personal as well.
Yeah, for sure.
So a quick question, this will be a two-parter. How many times over the years have you blown or reset accounts? And what do you feel like was the biggest mistake you kept repeating early on?
Crypto. Hands down. I think that's what everybody says though. It's like that initial thing. It's like, what was it? Oh, it's the Bitcoin run. But I mean, honestly, it really was, because it's like, when that was happening, how many people came out and all of a sudden, overnight they were expert traders. And it's just like, you're like, man, I can get, $50 and I can put it into this, this broker account and just hit buy. And it's going to like, go to the moon. And next thing you know, it's just like, nope, it's just hitting the sewer.
Yeah. No, that happens time and time again with crypto.
It does. And honestly, I mean, for me, that's really what happened. Like, I saw the stuff going on with Bitcoin, and at first I was just like messing around with it, just in an immature stage and going, this is just, it's too easy. I'm messing around with the demo account, I'm clicking buy, and the volatility is there literally 7 days a week. So it's turning profit. And then all of a sudden, I put the real money in there and, there goes a $50, there goes $100,
Yeah.
and like, so the most that I've actually like blown in the sense of like real money has probably been, I want to say, because I've been real conservative about it, just knowing like where I'm
Mhm.
at. It's been probably about $700 just
Okay.
total. And that's just, I mean, that's over like a 7 year period though too.
Mhm.
Because the thing is like that when I started doing that, I realized, and this is one thing that Michael emphasizes. It's like if you are losing that many trades at a time, you need to step back and look at your educational portion of things, and you need to really focus in on that. And I think that's one thing that's very crucial is that because a lot of people want to get in and they want to make it right away, and they want to do like the 90 days, like 90 days to a successful trader. It's like some
Yeah.
people can do that if you're a savant. And it's like, it's doable. Absolutely, because trading is not hard, but it's like, you have to have the wherewithal. And but then also, I think that's what makes a mature trader though too, and a mature just like business person or investor overall, is that they look at it from the long run and then they say like, if it's not if it's not turning profit, if it's like, if it's not working, it doesn't have to be perfection, but at the same time, you need to step back. And that's one of the things like that I've heard recently that I really like is that it was actually the Einstein of Wall Street who was talking about that. He's like, if you have 3 losing trades in a day, it doesn't matter if they're on multiple instruments or on one instrument. He said, shut the machine down and go spend time with your family. And that's it.
That's right.
I mean, it's that simple. It's like it's better to shut your computer down. It's better to shut your phone off. Get away from the platforms. Wait for a trade to present itself. Set your alerts, which I think is really key though too. Allow those to work for you, not against you.
Yep.
And then with that though too, spend time with your loved ones. Go, have a hobby. Get a job. Go to school. Do something else. So just that's away from it. Read a book.
Yeah.
Whatever it is. That's not just like in front of that screen, because the more that you're in front of that screen, the more you're going to be hunting, the more you're going to be pushing, and the more that you do that, you're just going to just keep either losing track or you're going to keep trying to revenge trade, and it's like
Yep.
it's not worth it.
It's not at all. I mean, preservation of capital is key, man. Never put
Yeah.
yourself at that kind of risk unnecessarily.
Yeah, absolutely. And that's the thing is like when you start working with those bigger numbers and you actually start having like a fully functioning account, it's better to, to go in and like, because like I said, earlier, like I'd much rather have a trade that's gonna, go all week and it's gonna give me
Mhm.
good positions that I can just enter into continually on one pair that maybe moves super slow, but I know that it's there and that it's working for me versus going in and going, I got a US 30 pair, that it's like, I'm just waiting for the market to open. Once that bell hits, it's going to shoot to the moon. And then all of a sudden it opens. It's like, nope, it's not shooting anywhere.
Right, man. That happens, man. That juice and that momentum's not always there for us to capitalize
Yeah.
on.
Yeah. And it's like you can't buy the hype because that's one of the things that people get lost in is you get lost in the hype. It's like, they get lost in, the Instagram posts, they get lost in, the influencers. And it's just like 90% of that stuff isn't even real. And a lot of that's coming from other places though, too. And I think that's what a lot of people need to realize though, too, is that, you can do that with trading, but your focus isn't on the Lambos. It's not on the Rolexes. It's not on the big houses. It's like first and foremost, it's like doing what's in front of you. Like we said, continually treating it like a business. And when you get in that mindset, everything else is going to follow. And it's just going to be what it is. It's not going to be something you have to force. And like honestly, at that point, you're just going to be thankful for it. And it's like you might be, just as happy driving the Toyota versus, driving the Bentley. And it's just like, but you got something that's working and that it's going to be, for the long term.
That's a fact. That's a fact, guys. Don't get lost in a lot of that social media stuff. It's about doing the work. In the beginning, and a lot of people get lost in what the success is around trading. But if we come down to the baseline of it, I think we can build community and culture around just doing the work, following the practices step by step that we make sure we do every day, right? And being able to share that routine, share what we're doing on that usual basis sets foundation for everybody, right? If the objective is to bring more people up into this niche and help them be successful, that's where it's got to be at. It cannot be lost in the profits of it and all of that stuff. You'll get distracted. You'll have that wish or that FOMO that kicks in, and we've got to kind of stay away from that arena and focus on how do if I have a tree in front of me, I got to chop it down. Where do I start at? Where do I put my axe, and how do I hit it time and time again to get consistent in that one area? So that is really important. That's a great point. Great point.
Oh, hey traders. This is a quick reminder. The clock is ticking and this is the last 30 days to lock in on our current rates. If you've been on the fence, now's the time to really jump in. Here's the deal. For the next 30 days, you can enroll in Independent Trading University at the current price of $45 a month for undergrad traders and $55 a month for career traders. And we've held this price point for 3 years to give every individual the opportunity to start their trading journey for the cheapest possible price point out there. So that's right. If you head over to myITU.org and secure your spot, you'll be able to lock in at the current prices. Now here's the best part of the situation. If you're already with us, you're locked in at the current rate as long as you remain a student. That's our commitment to you. So if you want to start learning and earning with us at ITU, don't miss this final opportunity to lock in the best rate. Now we've had a phenomenal year. Many have finally crossed over that milestone of getting their funded accounts. So this is prime time for you to get locked in before the holidays, and let's make sure this happens for you. I'll see you guys on the other side.
Yeah, and the big thing that too that a lot of people miss is that like trading is it is a great, wherewithal, but then at the same time, it doesn't have to be like ends to anything. It's like it's an ends to a mean is what it really is. So I mean, you can take that and now you've got capital that's flowing in, and it gives you the time freedom, which allows you to do other things. And that's the beautiful thing about it. It's like, whether that's, pursuing other hobbies or other passions, or, taking that and investing it into, other streams of income, and not just using it as a sole source. I mean, because it is possible to do, but then at the same time, it's just like when you have the ability to kind of take it and then to multiply it, where you aren't having to sit at the computer and try and, hunt these things down all day. You can just go and you can say, okay, maybe I'm going to put it into some property over here. And I've got, now I've got, 12 rental units that are working for me. And I don't do anything except for I've got a management company who handles that. And now I've got capital coming in that's completely hands-free. And, now I'm setting things up it's a source of generational wealth, versus just kind of just like the here and now. And that's one thing I think that is beautiful about trading is that it's transferable. It's a transferable knowledge and it's a transferable skill set versus, you go and, maybe you're a banker or something like that. You got to go to school and you got to do all these things. It's like, you hope that you get that job. But this is something that, you can teach to your children, you can teach to your grandchildren, they can pass off to their kids and everything like that. So I think that's one of the really cool things about trading.
Most definitely. Gotta love the skill set. Gotta love it. So now when you're working through the account, okay, we're going from 200 to 1 million. Did your strategy change as the account grew? Or you might have switched up your execution style while keeping the strategy the same way?
Yeah, it definitely did. And I was surprised at that because like I very much so love swing trading because like because I love just the natural aspect about it, being able to just go in there and kind of just relax with something, that it's moving, that it's doing what it needs to do. And then you can kind of just more so just manage it as it goes along. But some of the things that have really helped me just really scale the account was honestly the run on gold. So I knew that going into it, that volume and liquidity usually pumps in the market during New York session, primarily with gold. So that's when we're going to see a lot of like the bull runs and the things that we see taking place, and that it really allows the market just to move how it needs to and have solid structure. Because a lot of times like gold is not a bad pair to trade, but I mean like if you look at it overall structurally from like even a higher time frame, it has a lot of just like beautiful fluidity, but it is very choppy compared to other markets. And it is better to trade on like an intraday scale, or it's better to look at it maybe from just like a scalping point of view. And so when that stuff was moving during New York session, I was like pulling kind of more of that scalper portion of things out, or just more of like, the intraday trade. So I was holding it, there was a couple trades that I got in on gold, and I think I had it was four 30 standard lot positions open on it.
Wow.
And
Wow.
it seems like it's a lot though, but I also saw the move. So I knew it had come down, it had retested, it got a solid support area, and it had broken and then it had retested again. So that's telling me that the market now is ready to continue to push to the upside. And even at some of the trades, like, I caught kind of like midstream. So like it was going up. It didn't give me that retest, but I knew like it had broken and that it was then moving when the actual exchange had opened. So I went in at that point, I just aggressively scaled and then, put in like, maybe 30 lots. I think there was one time, I think it was 30 that was the most that I did on it. There was one time that I did 100, but that was like a real quick in and out move. And that was like literally like less than like probably a 30-minute trade. I mean, I literally just was like, okay, I'm getting in and out, and I mean, that's all that I want. So I some of them have been like that, man, and that's what's really helped to scale the account, because it's just like when it moves, it moves. It's just like take it.
Right.
So that was what really did it though. And I literally sat there and I saw like the phone jump from, it was from 7,000 drawdown, and then all of a sudden like it's jumping up to 20,000 in profit. 50,000, and then all of a sudden 100,000. I'm like, okay, I'm done, and that's it. I just took it. I'm like, all right, I'm not gonna be greedy at this point. It's like it gave me what I want. It actually gave me more than I wanted. So I mean, I am fine with that. I can walk away, be happy, and then if something else presents itself, that's fine. And there were days that it did that though. There were days that I sat down, I just hit those trades early on because I had the availability to do it. And then there were times like later on in the day where it had like it maybe was kind of ping pong, and so like it got up, it hit an area, and then it was going to drop down. And like as much as I don't like doing counter trend trading, I just got in there. I'm like, okay, it's going that opposite direction. All right, I'll get a short in on it, take it, get out, be done. That's the best feeling, honestly, is like when you go in, you have those trades and that like it exceeds the your expectations, and like you're able to like to get out early, because then you're like, okay, the account's closed for the day, I'm good, I'm butter. I can just walk away though, man. And it's just like it's easy at that point. But then are those ones where you want to get in and you want to just allow it to just continue to run, and then at that point you just bring your stop loss up where it's in a breathable area, whether that's 50 pips, 70 pips, and then you just kind of just trail it. You just let it run up or you let it run down, and you just stack your positions, because that's how a lot of people do it. Even like in a lot of financial planning offices or big institutions, is they just go in, they know the market's gonna go one way, it's gonna go on a bull run, so they just follow it. That's that. There's like the reports on the news every day, the Dow Jones is up 700 points. It's like because they're just following it up. That's all they're doing.
Right. Yeah, no, that makes sense. So I want to ask, at what point, right, let's say as far as account size, did you start to feel comfortable to go to 10 lots, 20 lots, 30 lots? Because a lot of people will get a bunch of pizzazz just being at 1 lot, 5 lot, like they're really excited at that point.
Yeah.
But to cross the 10 to 20 to 30 is really big positions and a comfortability of drawdown there. Because I mean, instantly you're looking at 2,000, 3,000, 5,000 in drawdown.
Yeah.
And what account size did you feel comfortable to go to that level?
Honestly, it's just scaling it all the way up from $200, because the way that I normally do it, and I was a little bit more aggressive with this one just because like I saw the positions present themselves, and I'm like some of them when I was entering, I'm like, oh my gosh, what am I doing? But then like also at the same time I knew I'm like, I'm not going to hold this forever. I'm going to get what little bit I can and just capitalize off that lot to build the account, and then really get in a place where it can be more natural. So I'm like working with a larger amount. I'm not just flipping it anymore. But usually the way that I do it just traditionally is it's very conservative. So if I'm starting out with like $100 account, my focus isn't on trading, a 0.10 lot size, unless, I really get like a clear position that's going to move. My goal there is to get in like maybe two good positions at a 0.01 lot size. And then like, because I know my account can handle it. So if it goes down and if it hits my stop loss or I need to pull out early, then it's going to be okay. The account's going to maintain itself, and then it's going to be there to make money. But then like as you go up, you just scale that. So you go from 200 to like 300. So now you're trading a point, oh 03. And so for this specific account, what I did is outside of those more aggressive trades, is I just did that. And when the trades presented themselves and they were more so swing style trades, I was just entering multiple positions. So I was waiting for the breaks and the retests in that, and then just entering in based upon what my account was sitting at that time. So obviously, the bigger the account gets, the easier it is to turn profit. So once it hit that that like $1,000 mark, at that point now I'm trading almost standard sizes. So now I'm trading and almost getting $1,000 returns every day. So that's just kind of like how I've always done it. It's always just to focus on maintaining my capital, because I've always traded my own outside of just doing like the demo account stuff though. And because I want it to be my focus of like being able to trade my capital, not just to be like the self-made man, but then at the same time because I don't want to go in there and I don't want to do a challenge account, even though I feel like I could pass it for sure. I want it to be a place of this is something that I know my risk, I know the strategy, I know what's working, I know how this flows, in a long-term sense, not just having to go in and force something because I happen to have $10,000 in my hand, when really I'm trading somebody else's money if I'm doing a challenged account, because then if I blow it, then I'm still down $500. I'd much rather put in $500 of my own capital and be able to trade off of that, maintain that, and then build it into a functional account, versus just going in there and being like, yeah, I got this money, now I can work with it, and having no clue what I'm doing.
Yeah, it's a big discipline factor, guys. If you're going to be going into using your own account, practice with it. I mean, that's one thing I like on that side of the house is, yeah, I can go get a $500 demo account, practice with that week after week after week, back test on it, week after week until I get comfortable, then use my own real $500. So there's just those two avenues that are at your disposal. It's just how you're going to work them, right? And it's going to get you to a certain goal that you have financially.
Yeah, and I think that one of the big things is though too is that as you like go around or you go along trading though too, that you get used to is that you get comfortable not only using those bigger lot sizes, but then you also know when they're necessary. Because I think that's one of the things that people get lost in a lot of times is they see the big lot sizes and people using them and they're like, don't understand the methodology or the strategy behind it. And you have to remember that's like, that's years and years of experience of being a profitable trader behind that. And everybody wants to go in and replicate that. It's better just to start small, and it's better to go in and consistently turn $10 in profit from a 0.01 lot size and you're letting it ride, than it is to go in there and try and hot dog it, and then all of a sudden you're going, man, I just sunk over 12 grand into this account of my own money, and I have no clue still of what I'm doing.
Right. That's for sure. So another question, this will be the last one, of the guys, we'll get into looking at charts, maybe going over a few trades that you've taken that were really big winners, or some that you kind of had to sit through some pain, or some losers that really taught you a certain lesson more than anything. But the final question, if you just started over, and this is for you guys out there, again, you're just getting started, you're growing, you've got fresh $200, or you're coming into the new year and you're like, dude, I'm going to use my tax return, or I've saved up to the side, which is what you should do. You just save some money to the side to trade with. But if you had to restart, Josh, with $200 all over again, what would you do differently? And what would you do exactly the same?
So if I was coming into like to Q1, just like starting over with just like $200 in my pocket, and really just kind of just starting from like the ground level, like, just wet behind the ears, not really know anything about trading. Join ITU University. Know how to do that.
That's right. That's right. Hey, how you
Really,
start.
I mean, realistically, I would say like honestly, no, you hit it on the head, Zay. Like, I mean, you said like set it aside because learn the skill set. I mean, whether it's here, learn it because once you learn it, that's going to be a wrap. I mean, literally, because then you're going to know not only a functional strategy from people who have been there and who have done it for for a long time and are profitable and know what they're talking about. Because there's nuances to it though. I mean, it's not just like trading and then at the end of the day you've made the trade, you've got the money. It's like now, how do you manage that money? Because now you've got $100,000 account and you've never made $100,000 in your life. And the next thing you know, the $100,000 is gone. And then Mr. IRS is knocking at the door at the end of the year going, hey, we saw that you made all this money. Congratulations. But by the way, there's a little thing called capital gains tax, and we want our slice. So I mean, it's really it is about learning the skill set. It's about learning the business surrounding it, and it's really about learning it as like just a well-rounded, just functioning entity. Because I mean, that's the thing is that you got to focus in on trading as a business. And like any business knows that, it's not just about making the profits at the end of the day. It's also about taking care of what you have around you. It's about being able to sustain that. And then it's also being able to go in and take responsibility for those things that need to be handled, whether that is, i.e. trading, because trading is independent and it is in a retail space. So you aren't doing it with multiple clients, at least, initially maybe. But that you're going in, you're having to maintain your family. So it's better to get that money and get it off the table and know that your family's taken care of at the end of the day than it is to go in there and try and, make something out of it. And then, you lose it all. But it's really to go back and focus in on just the educational portion of things, learning it from the inside out, and then knowing that it doesn't have to be perfect, but knowing that you have something that's workable, and then being able to take it step by step. So when you go in the markets, it's not only just an achievable goal, but that is something that that you can maintain.
For sure. Excellent. So let's get into it. Let's look at a few trades, a few charts that you have ran up. I'll ask a couple of questions here just about your process. Again, we want to use this as an opportunity for a lot of you new guys to learn, to soak in some information. But when you are ready, I have that share open for you.
Awesome, man. Go ahead and do the screen share. So let me know if you can see it. All right. We good?
Yeah, we're up now.
Awesome. Very cool. Let me see here. So I'm gonna adjust all this stuff. Zoom is not my forte.
It's all right. You're clear on this side, so I can see everything. Yeah.
Okay, cool. So let me see here. These are gonna be like some of the ones that I've been looking at here for the last couple weeks. These are kind of like my top 4 markets. Gold, I mean, obviously gold has just been running like crazy though. So I mean, like we were talking about earlier, this is one of the ones that I'm really loving the ability to go in and make just great profits off of it. But I'm also very wary because when we look at the bigger time frames on it, we see that there's a massive imbalance in it. So as long as it maintains structure, then we should be able to continue more upwards versus having to be concerned about like a massive drop. But eventually it is going to hit that area of resistance and it is going to start to bottom out, which will give us really good selling opportunities. But as far as just overall, we're pretty set for that. So that's been kind of like the one that I've been really profiting off of the most. And that's just because like my focus on that is just going in during New York session when I know that it's moving and going between usually starting at like the 4 hour, knowing what my overall time frames are looking like so I can get decent market structure, and then just dropping it down usually to the 15 so I can see like those minute moves. And so as it does break and retest, I can just get in, make money, and then close out early, so I'm not having to hold trades for a long period of time, risk any type of either drawdown or having to go into a place of where, you know, it might retest and all of a sudden it's going to drop and completely just start taking positions out. So that's been one that I've been really focusing on. The other ones that I have that I've really been liking this week personally has been it's been odd CHF. And that's just because it has a really nice overall structure. When we look at the bigger time frames. So these are some of the ones that are like, I know that are moving right now, and that have been actually turning profits. This one, the GBP CHF, not so much. It's been running a little bit slower because of the holiday season. However, some of the ones that have honestly hit my account pretty hard. Let me see if I can find them real fast. I don't think I have all the markups on here still, but let's see what we can do. Yeah, so one of them was USD JPY, and that's just because it was a slow moving pair at the time. So I got in one of these pullbacks here, thinking that like it was going to buy up though because of just the way that the market structure was presenting itself, and I went too heavy on it, and the next thing I knew, it's like it went the opposite on me, so it completely took out all those positions. I mean, long term, I've got it going in the right direction. Sometimes I've gone against my analysis, and one of the things that I have to really work on is just trusting the analysis, but then also making sure I'm checking the charts though too. So those have been some of the biggest ones, but these are the ones that I'm personally looking at that I really want to see make good bear runs into the new year, just because it's presenting good market structure when we look at our bigger time frames and we kind of know its direction, what it's telling us. And then like some of them, like this one here with the Australian dollar to Swiss franc. This one's really nice because I like the structure on it, but I know it's also going to be a shorter term run on this. So those are just some of the ones that I've been kind of looking at, and some of the ones that I've really have made big losses from have definitely been not necessarily the ones that we would traditionally think like indices or the commodities, but it's been more so just those the slow movers, just because you get overconfident, I think, and that you begin to kind of like either put too much into it or try and hold it for too long, and then next thing you know, when it does move, you are just like you're losing capital and you're really not able to keep pace with what the markets are doing at that point.
Makes sense. What are the like 3 to 5 confluences that you look for on a day-by-day basis in the market?
3 to 5. Let me see here. Let me find one that I've been watching here and doing real good on. So this one here, this is one that I really like though, because when we do our top-down analysis, like I really look for breaks of structure. I look for areas of interest. I look for where it's at overall, just in the overall scope of the markets. So I usually go in and start at the highest time frame possible, which is usually the week. So I'm not looking at holding it like an extremely long amount of time unless the swings present themselves. But I want to make sure that I have an idea of what the market is telling us. And then once it hits those areas of interest, so then I'll drop down to my lower time frames, usually like the 4 hour, and that's where I begin to look for those entries. So once I get to that point, then I'll go in and I'll look for breaks and retests. And then once it comes down, it breaks and then retests and begins to move in a specific direction. Then I'll begin to enter slowly, and I'll usually do between just 1 and 2 positions at that point, with a healthy stop loss, in order to give it breathing room. And usually that one I'll do like on the daily. So the confluences that I'll look for on like the 4 hours will just be mainly, has it reached my area of interest? Has it come to a place where it's settling? And then is it allowing for it to begin to then move in the overall trends direction, or is it continuing down and needing to have a little bit more room where it needs to kind of reset some more?
And any specific like candlestick patterns that you mainly look
Um,
out for, or are you open to like 4 or 5 different patterns?
Not really. There isn't any specific pattern that I look for, only because each market's very different. And so, like, if you're constantly looking for one specific pattern all the time, um, you know, you can miss the opportunities, and it may also not present itself in the way that you're accustomed to. That's one thing like I really like about like the candlestick Bible and stuff like that, is it gives you an overall like general idea of structure and kind of like those patterns. But at the end of the day, it's going to look different. So it's not going to be like textbook every time. So, I mean, like this, for example, this is a perfect example of, I want to say this would be a head and shoulders position. So, I mean, we can see it forming, but like if you're just to look at this in the sense of doing like just even a line tool and just tracing it and how they usually show it in the books or whatever, they want to make a picture perfect. Like, you know, you trace it out, get all your candles in there and everything like that. And then let's see here. Oops. Candles disappear. And then we have a picture perfect pattern. But then we turn our candles back on, get rid of our lines, and we just got a jumbled mess. So, I mean, really, pattern wise, I mean, there's no right or wrong. It's just more so looking for the points in the market where I know that it is telling the story of like either buying or selling, and like looking at the overall structure in order to know the market's direction. Because when you know the market's direction, it's like, you know, trend's your friend.
Right.
And so as long as you're sticking within the trend and you're finding those places where it's, you know, it's retesting, or, you know, it's coming to an area of interest. So it's had like that previous area tested multiple times throughout history, which, you know, we always look to our left, you know, to be able to look to our future. And so we can see where it's come down and it's had that area tested time and time and time again. Now we can say, okay, now it's in a place where it can buy. Now it's in a place where it can sell.
Makes sense. Makes sense. So finally, last question that I have here for you is, what would a bad trade look like on your chart? Something that would signal to you like, yeah, this is one you need to get out of, or there's nothing for me to do today.
Bitcoin.
Always the example. Right?
Always the example, the go-to whenever somebody asks that. No, I mean, Bitcoin is really good though. Like if you know how that it moves in its phases and everything like that. But yeah, honestly, like a bad trade. I'd say like, I mean, gold is a really good example of one that is presenting very good market structure on lower time frames, but then it's also presenting horrible structure on like, you know, your top-down analysis. So I'd say like if somebody was looking at this overall, like not understanding just the different economic aspects of gold and the reason that it moves the way that it does with just the feds and all that stuff, you could look at this and you could say, oh man, that's ready just to, you know, just to sell. But then, you know, you get a sell and it's going to take you out so fast because there's just no structure presenting itself right now. It's just something that you have to just be very patient and wait on. So I'd say like there is not any like bad structure. I think it's just more so it's the aspect of people being impatient is what it is. Because if you're patient, the market is going to tell you what it wants to do. And once it tells you what it wants to do, then instead of just reacting to it, you're going to respond to it. And if you can respond to it, then you're going to be able to be profitable, because then you're going to see it's like we talked about earlier, you know, it's working for you, not against you. And it's in that place where you can actually begin to move with what it's presenting versus just trying to, you know, paint your own picture.
Right. So it's very important for you to just be in flow with what's currently happening in the market.
Yeah. Yeah, because I mean, every single market is going to look very different. I mean, for gold, it's going to look like a massive bull run. Yeah, for odd franc, it's going to look like a pullback, and then it's going to continue up. For other ones, it's going to it's going to be drops. It's going to be breaks and retests, like where it has to come up here. Like I know that one that we were looking at in the uh the Discord group was the yin, and that, man, that was a beautiful call though. But like if you look at it, like the way that it flowed, it's like it came all the way up here, and I mean, you can see where like just overall it just smashed that entire um previous structure up there. But like if we saw it up here, we'd be like, man, it's got to like go up here, it's got to retest, at some sort of like an area of resistance, and then at least come back down, because we have such a see over here where it did retest and it's continued going up though. So it's just really all about just being in a place where you're able to just be flexible, and that's what really builds that mature trader. Is it's the flexibility, and it's also just that knowing that you don't have to know all the answers or have all the pieces of the puzzle. You just have to come in and just be open with what's presenting itself, and then at that point you can begin to just move accordingly, and have an amazing time.
Yeah, no, that's for sure. You can make it something fun to do when you are in correct direction and correct flow with the market. You're not over leveraging. And doing what you guys know is by the rule book, right? Which we teach you guys.
Welcome to Independent Trading University at ITU. We're more than just an education platform. We're a community built to help you succeed. Trading can feel like a solo journey, but with ITU, you're never alone. Our team is here to support, guide, and push you toward mastery. Technical analysis support, so you can read the charts with precision. Fundamental support, so you understand market moving news and economics. Psychology support, so you can develop the mindset of a successful trader. We provide the tools you need to thrive: weekly live education, 24/7 community support, and real-time trading setups from experienced coaches. Wherever you are, access the education and mentorship that will transform your trading. Join ITU today and trade with confidence.
So that was fantastic. We're going to end off really quick with a few student questions that we have lined up here, and then we'll call it a call. But again, this has been truly phenomenal. I hope you guys are listening, taking notes, and taking advantage, because it's a game changer. It's what's going to set you up, to do the right things for 2026. So, question one, what time frame do you build your bias on versus execute on, and why?
So the way that I build my bias is always top-down analysis. The reason that I do that is because top-down analysis is always going to show you what the markets are doing. Because it's better to get like an overall idea of like the picture, like the grand picture of just the trend, which way it's going, than to try and start from like maybe lower time frame. And that's what I think that a lot of people get in that detriment of. It's because they want to either swing or I'm sorry, not swing, but they want to scalp, or they want to do like intraday trading, and then they miss like the overall movements that are happening on a bigger scale. Because that's the thing, is you might be in a pullback area of a bullish market, but are you having confluences at least in 3 to 4 time frames where you can justify that, and then you can translate that for your entry position? So that for me is critical, because I'd much rather see that the market is maybe going against my bias, and I can say, okay, I'm not right on this, and then I can adjust it knowing that it's going to go in the right direction. And so at that point, I'm moving with it. And then look at my entry points versus just trying to, go in there, keep a bias, and that it doesn't work out. And then for me, for my entry points, the ones that I'm mainly focusing on after doing the top-down analysis from the weekly and the daily, and then finding congruency in that. So I want to find the congruency between usually either the weekly and the daily and the 4-hour that tells me if it's bullish or bearish. And once I do that, then I go in, I start looking for my entries on my 2-hour, 1 hour, and then usually 30-minute, and then I try and enter in on the 15 if I can get a solid entry. If it's a little bit more of a position where it needs to kind of just like move some more, I'd much rather have one that has a little bit of drawdown on it, but know that it's going to continue to go in the positive direction rather than to go in and try and just like sniper trade every time. Because the more that you do that, you're going to be able to get like better sniper trades like 9 times out of 10 anyway, because you can see the moves taking place versus going in and trying to just focus in on, pinpointing it, getting it on that 1 minute, and then all of a sudden, you're in profit, then you're out the next minute.
Right. Yeah, if I can give you guys a piece of advice, lower than a 15-minute, I mean, it really starts to turn into noise. I mean, I know it did for me. So that 15 and 30 is solid.
Absolutely. I mean, you can adjust it though too. And again, it depends on your strategy and depends on that tool that you're using. Because you gotta be like Batman when it comes to the markets. You gotta have all those tools in your tool belt. And so, if you got, one thing coming at you, you pull out your batarang. If not, you gotta get out, your grappling hook. So you gotta really know what the time calls for. And so that was the one thing that I honestly learned earlier on in just like trading was I was watching this guy. He did I think he was trading on the floor of Wall Street for TD Ameritrade, and he said that when you come in to trading, you have to view it as like the market is like a wall. That wall isn't always going to work the same. So you have to have all these abilities underneath your skill set to say, I need to be able to scalp now. I need to be able to swing now. I need to be able to intraday trade now. But knowing what the times call for, and then as you adjust to that and adapt, the more it's going to not only develop you as a trader and allow you to be more well-rounded, but then it's also going to allow you to get those pinpoint positions, and that you're going to miss out on a lot of trades that may go in your favor, but then at the same time, you also know what you're looking for and how to utilize the strategies perfectly, so you're avoiding a lot of losses at the end of the day.
That's for sure. Take these notes, guys. Take these notes, man. That's important. So how long, next student question, how long have you been building that $200 account for?
So that was actually, honestly, it was a really quick build on that one. And I was really surprised. That one started probably, I want to say late September, early October. And that was just because that's when we hit that bull run on gold. I mean, a lot of it, I'd say I credit it to that, but I mean, it really is. I mean, because it really just takes, like we've been saying the whole time, it takes one trade. That's it. I mean, you don't have to have a lot of fancy trades. Like if people would have gone into that, whether they had a small account or a huge account, that thing would have just multiplied like crazy if they would have held it and just like stacked positions. So for me, that was one that I definitely really helped out. And it was a quick turnaround only because of that. Now, had it not have done that, I would have had other opportunities that would have presented themselves, and that would have allowed it to grow. But I don't think it would have grown as fast. And that's just because that is such a volatile pair. And like, that's one thing that I would say as like a precaution to everyone out there, because a lot of people, they want to get in on like, the latest trend of trading. It used to be at first, it was Bitcoin. And then after Bitcoin, it was US 30. And now it moved from US 30 and now it moved to gold. And everybody wants to trade it. But unless like, you can, run with the big dogs, then don't mess with it. It's better to just go in there and get like a solid understanding, work with a smaller account and do like smaller instruments, whether it's basic ones like, USD, JPY, work a little bit with G, but be careful because that one's a little funky. Something that's solid though, so you can begin to get your feet wet versus just going in there and wanting to just go balls to the wall, and then next thing you know, your account that you were like prospecting out and expecting to have at another extra $100, $1,000 at the end of the week, it's completely blown because you're just going off of what you're seeing on social media. And these people have been either trading for a long time, or there's other factors. They could be demo trading, you don't know that, or they could be just going in there and they just might have maybe a system that's working for them that you just don't know about. And so it's not wrong, but it's just like you have to recognize the place that you're in.
Most definitely. And another question that happened is when you cross the threshold from 200 to the 4 and 5 figure level, is that when you felt like you could add on and really push the gas to go forward into that 6, 7 figure level?
I guess yes and no though, and like because like with some of those trades, there were certain ones that I got into. I recognized that I could stack more positions in them and hold them for shorter amount of time. So when those opportunities were there, I would just go in and like maybe get like another 2 to 3 lot sizes on the top of that, which will allow the account to scale faster. Whereas other times, I wasn't looking for massive gains. I mean, there were some times that like I put in, a couple like $100 or 100 standard lot sizes, and I would close out at like $10,000, $20,000, and that's just because like I'm like that's all that I need. That I don't need to push it though. I mean, like when it got kind of towards the end and it was like almost like bridging that like that $1 million gap, I'm like, okay, I need some more that are kind of like put it over the top. So I was a little bit more aggressive with certain ones. However, even when I got to the end of that, it was still in a place where the market was just starting to pull back, and I'm like, okay, I'm not gonna like keep pushing it. I'm just gonna take what it's presenting now, wait for it to move, and then come back and get the rest of it. So even in the Discord, like that final post that I made on the testimonial group where it did finally cross over that $1 million threshold, the mindset in that was not that I'm gonna go in and make another $100,000, which would have been cool. That would have been like great to have just blown it like that. But then like I was just like focused on I have to make another 20,000, and once I make 20,000, then I've hit that mark, and then it's like it's officially a $1 million account. Awesome.
Yeah.
So when it got over that and it went and it exceeded it, so like, I think it was 1,000,000 like 73,000 or something like that. At that point, I was like, okay, this is great though, because it's already hit that. I'm happy with that. Close it out, and then that's it. Because then at that point, now my focus has not been so much on like trying to go in and like do as many aggressive trades. Now it's just like I've got it to a place where I can pretty much use whatever lot size that I want to, still within reason, because I know that the account can only handle so much. With drawdown, with the margin and everything like that, and then also just as far as just leveraging it. But that like going in there and focusing on like these longer runners. So like I would much rather get into something like a 4x pair where I know it's going to turn like a huge amount of profit. Like the other day it was like a $200,000 day on the Australian dollar to CHF. And that was just because it was going on its run, and it had already broken, retested, given me the setup, and then I was able to enter in. And I think it was only four standard 100 lot sizes, and it still made $250,000. And I mean, it's like, and that's a day. It's like, what more do you want?
Right.
I mean, you can do those $1 million trades, and it's good to get those, and you can hold it. Like I could have held it easily because it's presenting itself. But I'm like, it's running. It's going to come back into break and retest. And so now it's at this point. So I'm just going to take this, get out, wait for the retest, because it's going to come down probably back to my entry level, and then re-enter there, and then just let it ride.
That's right. Yeah, smart. Very smart.
In 2026, traders cannot afford to sit on the sidelines. This is the year of the action takers. The year you make a decision that changes everything. At Independent Trading University, we build an experience that brings together what traders have been missing for years. Mindset that keeps you stable, economics that keep you informed, technical precision that gives you direction. One complete system, one community, one path to independence. From January 14th to 18th, ITU Rise 2026 will take you through 5 powerful days of coaching, clarity, and next-level growth. This is your chance to level up with your coaches live, build your personal trading plan, and finally break the habits holding you back. General admission is free. VIP access is optional for those ready to go deeper. VIP $27 admission includes morning motivation with Daniel, pre-session Q&A 6:30 p.m. Central Standard Time, recording access for 7 days, Enjoy 7-day enrollment to ITU. Part of admission will be donated to the Grace Works program. Receive a discount on the ITU 30-day bootcamp. Digital copy of ITU Trading Guide $4,000 worth of value for $27. Whatever path you choose, one thing is certain. If you want 2026 to be different, this is where it starts. Register now at rise.myitu.org. ITU Rise 2026. The year of the action takers.
Okay, so last one we have, we had two more. One was, what were your biggest struggles in your trading journey, which you kind of touched on earlier. So we won't, unless you have something to add, we won't go back through that one again.
I think that with that, one thing that would be like really a valuable tool for a lot of people is don't quit. Because a lot of people, they see, the losses, they see like, oh, it's not an overnight success type of thing. And they want to, they want to get out and they want to just say, well, I'm not going to trade anymore. This thing is a racket, then they call, trading a scam. And, then they make all these Instagram reels or, these YouTube videos. And they're like, 20 reasons why Forex is a scam. And it's like, no, you didn't even give it a chance. You were in it for, for 90 days doing something with some goober that you met online. And like, they didn't have a clue what they're doing.
Right.
So I think that's one of the biggest things is because we got to look at it from the perspective of that, there's longevity about it. Because it's not just about the here and now. It's like, this isn't about us, making, millions of dollars. It's like, that's a benefit and that's a side portion of it. But the focus is like on the generations to come. And the focus has to always be grounded out and not only reality, but it has to be focused on your family, those around you, and what this amazing resource is going to do for like everyone else. Because that's the thing is like, it is a way to make insane amounts of money legally, but it's like, it's not just to be hoarded. And like, I think that's where people miss out a lot. And that they really fall off the wagon. It's like, you can't just quit just because you don't see it working. I mean, as for me, even like with the stuff that I've had to go through and learn, it's taken 8 years for that point to get to this point. And that's the thing is like, because everybody wants that, like, that instantaneous success, and they want it to happen because that's what they're told by these, these gurus or these mentors out there. But it's just like, it's a marathon. It's not a sprint. I mean, if you get in a sprint, great. But, focus in on the long run though. I mean, even if you're doing that.
No, that's for sure. It makes a major difference. And you guys got to take this thing seriously. And like you said, man, you cannot give up. He's able to do what he was able to do with $200 because of 8 years of work, grind, hustle, learning, readjusting, adjusting, coming up with a strategy, coming with a plan, and then putting up something into work. Finally, that pushed him to another level, right? And allowed him to get comfortable adding in size into a lot of positions. So you might sit there and wonder, man, how did you go from September to December from 200 to 1 million? It's like, dude, because when the time came for me to add size, I added size correctly, and that pushed me to another tier, and the next tier, and the next tier. So you're like, all right, boom, I got 200, now I've got 1,000, 2,000, right, 5,000, and that's going up to 10, 20, 30, 40,000. The next thing you know, you're in the six-figure range. And in the six-figure range, if you're still doing the foundational stuff correctly, that's what gets you up to 7.
Yeah, and I think that like one good analogy of it is it's like, we think of like, I mean, for those who've seen the movie Limitless, I mean, that's like the perfect example. Like everybody wants the magic pill and they take, that MCD or whatever it was that he was taking in the movie. And then the next thing you know, like, he's this savant of a trader being sought out by like, the biggest hedge fund and, just doing all this crazy stuff. And it's like, it's not always like that. I mean, some people do get it that fast, and that's awesome because, they're blessed that way. And that's the way that God's wired their brain. But it's just like for a lot of us, it's about repetition. It's about using what we have in front of us and being able to just steward that wisely. And like the more that we focus in on that it is an education. Every day that you show up to the markets is an education, no matter if you've done it 1,000 times or if you've done it once. You always have to be a student, and you always have to be in that place of being pliable, that like as long as you do that, then you're going to be fine.
That's right, man. One thing we are always as traders is learners. We're always learning. There's always a good book to read to add to our foundation, our mindset, our repertoire. Like you said, having that badminton belt and knowing I've got these tools right here that I can use, but knowing when to use them, right? That's what reading the books are for. So as you grow, and it's a never-ending process, and that's the beautiful thing, man, is if the normal average person is going through learning and then they get to the degree and then they're typically done learning. But if you're really progressing, you're really growing in this industry, it's nonstop. And there's always good information out there that we can use.
Yeah. Yeah. And I think that one thing with that though too is it's also and this is one thing that a lot of people don't talk about, is also knowing your learning style though too. Because like if you're more visual versus auditory, if you're more auditory versus visual, it's gonna flow differently for you. Because books and stuff like that, we can read those, but at the end of the day, it's just like, nothing beats just that experience. So get into it, just get on the charts, start looking at them, start working with them, even if you don't know what you're seeing. And then as you get the education behind it, then you're going to begin to develop that, know what it is that you're doing, and then practice with it. Get that demo account going. Just, practice with the demo account, let it work for you, and then, treat it like a live account constantly. And always, always, always set your stop loss, because that's one of the things that people fail at like 9 times out of 10.
Yeah. No, it's a major fact. And that's the part most of you people do not want to hear, but it's what's going to work. So for what you guys just listened to today, look, it wasn't luck. You heard the man, he's been in the game 8 years to get to the position and do what he's doing right now. It wasn't a one-off trade. It's years of result, repetition, discipline, respect of risk. And that's the real takeaway as we enter this new year. 2026 is not going to be rewarding emotional trading. It's not going to reward you trying to take shortcuts or you're using 8,000 different strategies and not having any structure. It definitely won't reward you being impatient. As you hear, that was his huge Achilles heels, is not having that patience and having to learn that, which takes time. You know what I mean? A lot of you guys are in a rush, but take the time out to understand that, this is an area that I need to focus on it, fix it, adjust. And then in the new year, you can add the right structure. You can be prepared properly. Your execution will be on point and will separate those professionals from everyone else. So that's exactly why, guys, coming up, you got to be at ITU Rise, right? We're going to look at these things and set those foundational principles. It's the free 5-day event designed to help traders reset their mindset, sharpen their processes, and start the year with clarity instead of confusion. So if that's one of you guys and you're going through it and you've sat here, you've listened to what Josh has been able to do, and you're tired of guessing, you're tired of blowing your accounts and learning how to really approach this like a business, which is what he lined out for you guys. He started to treat it like a business, knowing exactly what he needed to do to stay in flow with the market so that he could add size, right? That becomes really hard to do if you don't have that ground foundation built out. And the fastest way to get there is from experience, him being able to come on here and show and share his experience. Us getting on here and being able to host this Rise event for free is to give y'all years and years of what we did wrong so you can skip those steps and do what's right. So if that's you and you're ready to go, bro, go to rise.myitu.org and secure your spot. We're breaking down mindset, we're breaking down market structure, economic context, and execution step by step. So you're not walking in this year blind, and you can get rid of those excuses. You can be here like Josh, having this kind of same conversation. And for those of you who want a deeper process, right, get into that real access of the mindset and get some time with the coaching, get some time with what are the technicals you're already doing that we can adjust. There is a VIP option available for you guys, for those traders who are serious about elevating your standard. So as always, Josh, thank you so much for being a part of this. Thank you for being a part of the ITU community. And please, you guys that are out there, share this episode with someone who needs to hear it. Like, subscribe, do all the YouTube stuff. You know how that goes. And then we'll see you guys at ITU Rise on January 14th. And we'll see you on the charts. Josh, thanks for coming through today, bro.
Yeah, thanks for having me on, Zay. And if you guys need anything at all, just feel free to reach out. I'm always on Discord, and then I'll be glad to help out in any way.
Excellent. Happy New Year, and let's get ready to execute, man.
Let's do it, man. Happy New Year.
All right. I'll let you later.